Hello and welcome back to the channel. Now today I'm going to be talking to you about high risk investment strategy. That's right, a high risk investment strategy. Now I came across cryptocurrencies round about October, November 2016. And when I came across it and I was decided to research it, as I was doing the research, I came across this video clip of an Eastern European sounding guy, maybe German, Eastern Bloc Europe, etc. Anyway, that doesn't really matter. But what he said was that his idea was to borrow £10,000 or 10,000 units of whatever denomination that you spend wherever you are. So 10,000 euros, 10,000 pounds, $10,000. In my case, 10,000 pounds, and invest it in cryptocurrencies. Now, when I came across that video, I laughed and dismissed it as a crazy idea. Why would you borrow money to invest in a volatile market at that? So would borrow money to invest in the stock market, which is subject to the ebbs and flows that you get in this sort of marketplace. So I dismissed that as a silly idea, and I dismissed the guy as a clown. But now it's not quite a silly idea, and the guy, instead of being a clown, is rather a bit of a genius. He certainly has foresight anyway. So his idea was to borrow £10,000 or 10,000 units of currency and invest that unit of currency into cryptocurrencies. Now, had you done that, where would you be today? Okay, so today, as at this moment of recording, cryptocurrencies stand at Bitcoins stand at just short of £2,000. It's £1,987. Ethereum's £222. Litecoin's £36, and etc. with the rest of them. I've picked out those three coins because those are the coins that I am invested in. Now, had I gone with that Eastern European guy's idea, where would I stand now? Now, before I go into detail, obviously, if you borrow money, if you take out a loan, there's interest applied, and you obviously repay the loan plus interest. So, for ease of example, so this is just for ease of example, let's say you borrow that £10,000, and the interest over the course of a year, over a 12-month period, is 10%. So it's an additional £1,000 on top of that £10,000. So effectively you are paying, let's say you want to pay it off over the course of a year, effectively you are paying 1,000 and a bit, 1,000 and a bit, yeah. Okay, so now let's say you're taking out that loan as that guy suggested, which will be around about October 2010. So October 2010 is how many months ago? October, November, December, January, February, March, April, May, June, July, approximately 9 months ago. So you're taking out that loan approximately 9 months ago at that rate that the guy, at the rate that we're using for the example rather, and then you've invested it in, let's say you've invested it solely in cryptocurrencies, not in cryptocurrencies. Let's say you invested it rather solely in Bitcoins. Okay. So if you had invested £10,000 in Bitcoins as at October 2016, you would have come in at an entry point of approximately $650. So let's just use that. This is just a random pick. So I'm picking the 25th of October 2016 as an average of the value of Bitcoins for that month of that year. So now if we fast forward, if you come back, let me convert this to American dollars since that's the example we're using. So if you come back to the main screen, your approximately £650 in $650 investment would now be worth $2,575. So that's approximately a 400% increase on your initial investment. Now you could have repaid that £10,000 and still have in excess of that £10,000 as an investment in this marketplace. So that idea is not quite so daft after all. So let's just go to, I'm not going to go through all of the currencies, but let's just go through Ethereum as well to really make the point. So if you'd entered Ethereum for round about that period of time as well, which was trading for $11, now Ethereum now is trading for close to $300. So you can do the percentage maths, but you can see that you could have paid your low enough for a minuscule, a tiny fraction of the money that you borrowed, and you would have still been well in excess of that money. I should have done the calculations in advance, but the calculations really is not the point, because the figures are there for you to see, and so it's an exponential growth. It's almost like a bank robbery level of windfall. You know, it's like winning a lottery, a lottery, having a winning ticket on the lottery, effectively. So that's how that would have played out. But hindsight, of course, is a wonderful vision. I mean, when the guy said it, I said I dismissed it, but I did not dismiss it out of hand. I gave it some consideration before I dismissed it. And I thought it was too much of a risk. I wasn't willing to carry a loan, and I wasn't really confident in the market enough to have done that. But had I done that, I mean, I would have been because I invested right across the board in those three currencies: Bitcoin, Ethereum, and Litecoin. So had I gone in with that strategy and invested half that £10,000 in Bitcoins, and then split the remaining £5,000 between Ethereum and Litecoin, I mean, I would have just been doing cartwheels by now. I've been flipping, bouncing off the walls, booking holidays, etc. So that was that strategy. As at that time, I gave it some consideration before I dismissed the guy as a bit of a joker, rather I considered it too high a risk. So is that opportunity still there, is the question. Can you still go out and take out a 10,000 unit loan of whatever currency you are transacted in, invest it, and have that strategy play out as described? What are your thoughts? Leave that in the comment section down below, and I shall catch you on the next one.